There is a question hidden at the center of every recession, every housing crash, every inflation spike, every national debt crisis. Why does every bank on earth react instantly the moment the Federal Reserve speaks? Not just United States banks, not just Wall Street, but banks in London, Tokyo, Paris, Dubai, Singapore, Sydney, Johannesburg, Toronto, everywhere. How did one institution in Washington, D.C. gain the power to move the entire global economy with a single sentence? And here is the part they never explain. It has nothing to do with democracy. It has nothing to do with capitalism. It has nothing to do with free markets. It comes down to control of the one resource no bank can survive without: United States dollar liquidity. So today, we will reveal why every bank obeys the Federal Reserve. Not out of respect, not out of alignment, but out of survival. But first, a quick community check-in. Where are you watching from? Drop your location in the comments. Let us see how far the truth is traveling. If you are new here, subscribe now. This channel exposes the history, systems, and economics they do not teach, because if they did, the game would not work. Now, let us go back to the beginning. The setup. How control was engineered. In 1913, the Federal Reserve was created. The official story says it was designed to stabilize markets and prevent bank failures. But the moment the Fed was formed, something fundamental changed. Money was no longer controlled by the public. It was privatized into a central authority run by bankers and political elites. Still, in those early years, the Fed only controlled American banks. The world was still financially independent. That changed in 1944 at Bretton Woods. This global agreement made the United States dollar the world's reserve currency. If a country wanted to buy oil, move goods across oceans, pay international debts, or maintain financial credibility, it needed United States dollars. Sound familiar? Dependency disguised as cooperation. Then came 1971. President Nixon detached the dollar from gold. This was the most important financial decision of the last century. Because after 1971, money stopped being a physical asset. Money became a belief system controlled by the Federal Reserve. The dollar was no longer backed by gold. It was backed by confidence. Confidence that the Federal Reserve would manage its supply. This shift is everything. Because if money is no longer a thing, then whoever controls the creation of money controls banks, interest rates, asset prices, housing, debt, wages, savings, your day-to-day life. And this control expanded globally with something called the Eurodollar system. This is where dollars circulate outside the United States banking system, in Europe, Asia, Africa, everywhere. But only the Federal Reserve can create more dollars in a crisis. Meaning, banks worldwide can hold dollars, trade dollars, borrow dollars, lend dollars, but they cannot create dollars. And that's the trap. The world was locked into a dollar-based system where the Federal Reserve became the emergency source of survival liquidity. Which leads us directly to the moment everything became undeniable. The global financial system began collapsing, and you were about to see who needed the Federal Reserve to survive. You won't believe the list. When the global banking system began collapsing in 2008, something revealing happened. Banks around the world didn't call their own governments. They didn't call the International Monetary Fund. They didn't call their national central banks. they called the Federal Reserve. Because the Federal Reserve controls the one resource every bank needs daily to survive: United States dollar liquidity. This is delivered through something called swap lines. Think of swap lines as oxygen hoses for the financial system. If a bank can't get enough dollar funding, it suffocates. And in 2008, the Federal Reserve opened these hoses not just to American banks, but to foreign ones. Here are some of the banks that secretly received life support from the Fed: Barclays of the United Kingdom, Deutsche Bank of Germany, BNP Paribas of France, Royal Bank of Scotland of the United Kingdom, and Bank of Tokyo Mitsubishi of Japan. These were not American institutions. They were not under U.S. jurisdiction. Yet they were kept alive by the Federal Reserve. Because without dollars, they would have collapsed in days. Once these banks accepted dollar survival, something changed permanently. They became dependent. And dependency means obedience. Not political obedience, not ideological obedience, survival obedience. A bank that loses access to dollars, cannot pay foreign debts, cannot clear trades, cannot finance imports, cannot continue operations. Collapse is not theoretical, it's immediate. Now let's solidify this with numbers. 1. The Federal Reserve issued $16 trillion in emergency lending during the 2008 crisis. 2. 71% of that money went to foreign banks. 3. Today, 60% of all global debt is denominated in United States dollars. 4. 88% of world currency trades involve the dollar. 5. In 2020, the Federal Reserve reactivated swap lines within 72 hours to prevent worldwide collapse. This is not influence. This is structural control. The Federal Reserve is not just America's central bank. It's the central bank of the world. And when it gives instructions, every bank listens. Not because it wants to, because it must. The final warning. The next crisis will move faster than 2008. Because global debt is higher. Markets are more automated. Banks are more interconnected. Liquidity is thinner. Confidence is weaker. And the Federal Reserve will make the same choice it always makes. It will save the system, not the public. The oxygen will go upward, not downward. So here's the real question. Are we wiser now, or just walking the same path in better suits? Tell me what you think in the comments. Where are you watching from? If you want more truth like this, subscribe. The next chapter is coming.